Hi, this is Ed Finland with John L. Scott Real Estate, and today I want to talk to you about foreclosures and the different options to you instead of foreclosure. If you're watching this, there's a pretty good chance that you're either um, probably in the process of being foreclosed on, or think that it may be something that might happen to you. So, the first thing that you potentially could do is called forbearance. Under forbearance agreement, your lender may allow you to reduce or suspend payments for a short period of time. At the end of forbearance period, you'll begin making regular payments plus an additional amount of the past due payments each month until you're caught up. The pro is that you remain in your home. A temporary reduced or suspended payment provides time needed to save money, pay off other bills, find employment or additional employment, or recover from injury or illness. The con is that at the end of the forbearance period, your payment will be higher due to the past due amount owed. Your mortgage payment could be 20 to 25% higher for a period of one or more years. The next thing I want to talk about are loan modifications. If you can make payments on your loan but don't have enough money to bring your account current, your lender may be able to change the terms of your original loan to absorb your delinquent payments and make the payments more affordable. Your loan could be permanently changed by adding the missed payments to the back end of the existing loan balance, lowering the interest rate, or making an adjustable rate fixed, or extending the number of years you have to repay your loan. The pro is you remain in your home. The con is because of additional debt such as credit cards, car payments, medical bills, and student loans, most people do not qualify for loan modification. If you purchase your home with little or no money down, or your home has depreciated in value at a rate at or near the national average, you may not qualify. The next thing I want to talk about is a deed in lieu of foreclosure. If you're unable to bring your loan current or sell your home in a reasonable amount of time, your lender may agree to have you voluntarily transfer the deed to your property to them to help avoid the impact of foreclosure on your credit rating. The pro is by voluntarily transferring the deed, you save your lender tens of thousands of dollars in foreclosure proceedings. If you're willing to do this, Fannie Mae has reduced the mandatory waiting period to establish credit history to a minimum of 4 years. This mandatory waiting period after deed in lieu of foreclosure is lower than the required 5 to 7 years following a foreclosure, which realistically is probably more like 10. And that's if you start paying everyone as agreed. The con is, although a deed in lieu of foreclosure may have less impact than an actual foreclosure on your ability to establish home ownership in the future, if you're going to cooperate with your lender and take a proactive approach, a short sale is generally a better option. Just for the record, of the things that we've talked about so far, I am unaware of anyone in the state of Washington successfully doing a loan modification, a deed in lieu, or forbearance. The banks just aren't willing to do those things. And I do as many, if not more, short sales in Skagit County than anyone else. Probably the most realistic thing for you to do is a short sale, and that's where I come in. I'm a certified program 3648 short sale specialist and negotiator. And how short sale works is if you cannot bring your loan current, afford to make payments or move forward, or are unable to sell the property for the full amount of the loan, your lender may accept less than the amount owed as full payment. Under the terms of a short sale, your lender may forgive your mortgage debt in its entirety according to the terms outlined in the Mortgage Debt Relief Act of 2007. Fannie Mae has announced a reduced mandatory waiting period to establish credit history to 2 years after the completion of a short sale. This mandatory waiting period after short sale is lower than the required 5 to 7 years following a foreclosure. The con of this is you must sell your home. You realistically are going to take a hit in your credit report in any of these. With a short sale, it's typically going to be a much less of a hit. There is new legislation in place that will be taking effect any day. That, in theory, anyway, that you'll be able to get a home loan almost immediately after a short sale. But that isn't in effect yet, so I wouldn't want to give anyone the impression that that is going to happen until we know for sure. So, um, again, my name is Ed Finland. I'm with John L. Scott Real Estate. I'm an associate broker. If you have any questions, feel free to call me 360-542-6868 or email me at ed@edfinland.com. That's ed@edfinland.com. You can also get an idea of what your home is worth at www.skagitValleyHouseValue.com, or find out more about short sales and your different options at www.program3648.org. Your last option is to do nothing and be foreclosed on. You will probably get a notice of default when you're 30 days late. More than likely, when you're 90 days late, you're going to get a notice of a trustee sale. Some banks are waiting longer. They won't wait too long, and that will mess up their legal timelines. They're obligated to publicize this in a new local paper twice in the last month prior to the trustee sale or foreclosure sale. Within 11 days, you have your last chance to reinstate the loan. And once the foreclosure sale actually happens, and either the bank is sold to a third party or it reverts back to the lender, the borrower or lender or the homeowner has 20 days to live in the home prior to being evicted. So hopefully we can avoid that happening with you. So again, Ed Finland, John L. Scott Real Estate, 360-542-6868. Thanks.